So, I want to kind of move on to talking about like what's the future of ASICs. Christy had a thread kind of like talking about what could happen. I know lots of people have been rumoring like big players are coming to the ASIC space. It's not going to be startups running the show. Legacy chip makers are going to start making Bitcoin ASICs. Like, who has an opinion here? I feel like Leo may have some insight here that could be interesting. Leo, why don't you jump in here? What's the future of ASIC production, and are the big boys getting in?
Well, so I mean, obviously I don't have the insider information about the recent rumor of a major player coming in. I think everyone heard about that rumor, but I don't. I personally don't have a confirmation on that. I think it's inevitable for legacy players to start looking into this space, especially they already have a advantage in some tangent aspects. It's obvious from some of the former previous experiments of some smaller startups that starting in an ASIC, especially a Bitcoin ASIC company from scratch, is incredibly difficult. Especially nowadays, you have to compete with, Bitmain, if Bitmain is still manufacturing machines, MicroBT on wafer allocation, especially as we move on to more advanced processes. This become much more capital intensive. So you really need investors who really are willing to bankroll you. In order for a small startup to become successful. I think it's more common for startups to experiment with the FPGA or just go straight for altcoin ASICs, but that's incredibly risky, and there's no guaranteed success there.
Anyone else have a scoop here?
I think it's just a
Jesse.
matter of market size. I think that once the market size is large enough and it's consistent enough, you're going to see bigger players hop in. I mean, there's so much skill set overlap. I wouldn't be surprised at all if you see larger players start to play a bigger role in ASIC manufacturing. But I don't know if that's actually going to change the. I mean, in terms of it could be helpful for sort of your large. I'm going to have to drink for this, but institutions that are procuring ASICs to have more partners that have more of a name brand they're more familiar with. But I think in terms of ASICs, we're already seeing commoditization. We're already seeing competition. We're already seeing like payment terms today on a Bitcoin order look vastly different than they did a couple of years ago. And if you ordered ASICs in 2016 or 2017, it was you send a check or a wire and you hope that they show up. And that's a very different story today.
I think
just because you're.
Go ahead, Steve.
Oh, go ahead.
No, go ahead. Go ahead.
Well, I was just gonna say, like, I was thinking about like Intel. Like, didn't Intel recently outsource a lot of their chip manufacturing to TSMC? And if that's true, I think that's what I read. And if that's true, like, it just goes to show you, it doesn't really matter how big you are. It's how you use it. Like if you're a great product designer and you're a small outfit, I mean, you can still make it, right?
I think a trend, I have to be careful what I say here, so I'm choosing my words carefully. I think a trend you may start to see is that innovating on the actual silicon level, the chip itself, that's quite hard. And so MicroBT, as a great example, has managed to achieve something that no one else in the space can achieve. Even if, as an example, Global Foundries wanted to build a Bitcoin ASIC today, they would have to spend the 5 to 7 years of R&D and research effort to catch up on that innovation. And so what most companies will do strategically is instead they will try to do a joint venture where they will say, come, let us grab your technology, let's manufacture it, and use the supply chains of a Global Foundries to distribute worldwide. And so one of the capabilities I don't think people talk enough about is a company like Intel or TSMC or Global Foundries, they ship products worldwide. They have economies of scale that are unfathomable. And so if you're trying to build up your company to ship 10,000, 20,000, 100,000 ASICs per month, you eventually need to partner with someone who has already built out those supply chains. And I think that is the next wave of innovation we are going to see. There is very little you can keep doing on the chip level. I mean, there's some, optimizations you can squeeze out at process node, but it's a SHA-256D chip. We've done that song and dance for many years now. The innovation is all going to come at scaling up your operations.
So how does that fit in with what we were talking about earlier when we were saying that, a real fear is to see some big institution buy up a whole bunch of these rigs and just sit on them? I mean, it sounds like these are two competing forces right now, right?
Yeah, so if you eventually get to the point where you are scaled up, in our hypothetical example, by someone like a Global Foundries, or like an Avnet or a Future Electronics, you will not have enough capital. Case in point, can some big business today buy up every single PS5? Can some big business buy up every single Nintendo Switch? Can some business buy up every single iPhone? No, it's just, that is an insane amount of money. There's too much scale. And why would you do that? I think once you partner with someone who can help you scale up aggressively like that, that is no longer a concern. It is a concern when it's still very, very small. When a company can only produce a few thousand to 10,000 per month at best, and shipping times are 3 months. So a bigger corporation can ship weekly, daily even. So it'll be interesting to see what happens in the next 9 months. I'm very excited.
Yeah, I think I agree with that. I think in the short term, it may be a concern, but I think for long-term players in Bitcoin mining, I don't think it's really a concern. I think that if you're looking at, am I procuring ASICs in the next 3 to 6 months, like that's always going to be a volatile time window. There's always a ton of people competing for a limited amount of already allocated fab space. But if you're looking at longer term procurement over the course of a year or further out, there's tons of flexibility in how you obtain that.
Interesting. And Kristy, you said a time scale of 9 months. I mean, that strikes me as like kind of a short time scale to look at in terms of seeing some major changes in the supply chain of
Not at all.
No?
Not at all. Hardware moves incredibly fast. I don't think people realize how quickly you can turn around a hardware product. I mean, a mobile phone from start to finish, can be produced in 7 months. And then the rest is just, it's all marketing fluff and getting, polished in QA. And ASIC can be turned around in 6 to 9 months. If I've mentioned this before, so I can say it again. There have been, quite a lot of companies in 2017 really started looking into Bitcoin mining. So it's no secret that Intel was sniffing around. Intel now holds patents. Intel has a dedicated division researching Bitcoin mining. And Global Foundries the same. Now that it's all leaked, there's been plenty of mining farms that have partnered with Global Foundries to produce ASICs. TSMC, very, very well known in their North American division, that they've been partnering with miners. This is a thing everyone's looking at. Avnet used to produce one of the most efficient Bitcoin miners back in the day, the good old Spondoolies miner. They produce, the most efficient Dash miner. So big players are actively involved in this space. The biggest concern they had was the volatility. So when 2017 came around, there was this huge boom. Everyone was drooling over the sales volumes. And then 2018 hit, and where was the sales? Nothing. It was a complete lull. That volatility, it does not work well with hardware. Hardware is all about very, very tightly controlled timelines and prediction models. And so as businesses come into play in Bitcoin, DRAT, it becomes much more predictable. So a larger farm, they might keep acquiring power, and they have a regular deployment schedule of, they want to deploy 10 megawatts per month, as an example. They can work with their chosen hardware vendor to plan and allocate all of that out. As we start to get to that scale, things become a lot more easier. So I sadly am out of drink, so I will chug my water bottle.
Well, you have to, because you said Bitcoin. I heard it.
I did.
So here's another question, kind of along the same lines. When we talk about really big players getting into the space, one of the bigger players you can talk about is a country, right? There's a couple different threads I've been thinking about recently. One is, what countries will start mining, et cetera, et cetera. Second question, though, and feel free anyone to jump in and tackle either one of these, is what countries could we see really benefit from Bitcoin mining proportional to kind of their size currently in the global economy? I'm thinking things like, latitude, position, times, access to power. Do we see any of those really clear standout?
North Korea, man, obviously.
Go ahead, Steve. Sorry.
I was sort of semi-joking but semi-serious. Like North Korea. Any country cut off from trade, Bitcoin mining. They can export their energy, and certainly Bitcoin itself, right? If you're cut off from the financial system, obviously, but yeah, no, didn't mean to cut you off. It's more of a.
See, I don't know if I necessarily agree with it. I see the incentive on that, like people who are cut off from the rest of the economy could benefit from having Bitcoin, but you still have an opportunity cost to electricity. And that opportunity cost, especially in a nation where you may not have a ton of development, can be really high. Like if you have scarce electricity and your opportunity cost is probably going to be at least 5 cents a kilowatt hour. So if you're looking at your cost there, I think in terms of investment, the countries that are going to have the most growth are the countries that are going to be able to take the longest position. So countries that can get the cheapest cost of power, that can invest in long-term infrastructure and can have longer time horizons for those investments, I think are the ones that are going to benefit. So I think these are going to be countries that have like free economies with players that have a long-term Bitcoin focus, people that have a long-term belief in Bitcoin. I think that this sort of speculative mining of like somebody who's going in to set up a little bit is not going to last in the long term. I think that as mining becomes more competitive, you're going to have to make long-term investments. Obviously that's going to be cyclical. Like as you get expansionary phases in like big bull runs in Bitcoin price, everybody's going to just go plug into whatever they can. But in the long run, I think that it's going to be a necessary component of a Bitcoin mining operation for you to take this sort of longer position to really make long-term capital investments that I think speculative mining is going to get washed out.
What if, like, for example, along those lines, like Iran, they might get sanctioned. They're not allowed to ship their oil or export their oil. They start burning their oil to generate electricity and mine Bitcoin. Like, if they can't sell it and they're getting nothing for it, it creates like an arbitrage opportunity, right?
Yeah, I think if there are
add on to that, a place like Venezuela that has unlimited oil, basically, the problem with them is they're just so corrupt they can't get out of their own way. But like an individual, companies couldn't do it, but the government could definitely do it. But it just comes down to their level of corruption is just too crazy.
I mean, I think even in that case, that you still got the problem of like you're competing in this sort of global market where maybe you have a cheaper electricity because you're cheaper cost of electricity because you have artificial constraints that don't allow you to export. But are they able to make those long-term investments? Like, are those is that the kind of country that's going to build a mining farm that can have machines run for 5 or 6 years, or are they just going to build something that's like speculative, thinking that they can get a high return in the short run? And I think that like speculative mining is going to get washed out as you see these bigger players keep jumping in.
Right, agreed. I'm just saying, I don't think that a corporation could do it. I think that the government could do it because they literally have free electricity from.
Well, I mean, even take for example Venezuela, right? Like their electricity isn't free to produce. They still have they still have a cost of production and they still have opportunity cost as to what they could use that for. I mean, that's part of the reason you'll see like they don't like people setting up Bitcoin mines and running them. I mean, they'll go and seize Bitcoin mines from people.
100%. Yeah.
But yeah, I think the areas where, and I mean, anybody feel free to disagree with me on this, but I think the places we're going to see the most growth are the places where you have enough geopolitical stability that you can capitalize, like that you can make your capital investments on a 5 or a 10-year horizon instead of making that investment on, you know, a 2 or a 3-year horizon. If your cost of capital is coming from people that are only investing in very high risk capital on a, you know, 1 or 2 year basis, then you're never going to be competitive for the sort of scale and cost of electricity and operational scale that you get with a larger project that can invest on a, you know, 5-10 year horizon.
Jesse, I think you make a good point there. And just to play devil's advocate to it, though, you mentioned that Venezuela doesn't like people running Bitcoin miners in the country and they seize them. But what do you think they're doing with those miners that they then seize?
Yeah, that's no, absolutely good point. I'm like, I've heard that, this is just rumors that I've heard, but I've heard of people who've set up mining operations and they wait until, you know, it's all going and they've troubleshooted everything, you know, a couple of days after it starts operating, and then the government comes and seizes it. But I think what it shows is like, you know, the why isn't the government going and doing that themselves? Well, they don't have, you know, they don't have the knowledge, they don't have they're not willing to make the capital investments around that. They're waiting for somebody else to do that, and they're acting opportunistically. But I think that if you start considering like, okay, now you're a government and you have to build your own mining farm, you have to hire on all the resources, you have to dedicate this portion of your electrical production to this. Now you're starting to, I mean, you're regardless of the fact that you're a government, you're still competing in this global economic system. You're still part of that same game theory. So unless you're a non-rational actor in terms of financial incentives, like if you have some other sort of motivation, unless you're in that bucket, you're still ultimately beholden to the same sorts of economic factors. You're still beholden to the cost of production of electricity. You're still beholden to your cost of capital. You're still beholden to, you know, your economies of scale. So I think, you know, there's some countries that might, I think a lot of these countries are going to see some amount of growth, but I think in the long term, it's going to be hard to beat a place that has very high geopolitical stability where you can make those long-term investments.
So I'm curious, and I'm going to flip this. I'm going to put Leo on the spot here. On the flip side of kind of this question is what countries could you see disproportionately benefit from other people, you know, just taking their miners to that country? I mean, Iceland has been like kind of a good example of people wanting to mine Bitcoin there. Do you see other places in the world or other situations where, you know, bringing your miners there because of some external factor like it's cold really comes into play? And could you see a country really benefit from that?
America. I mean, it's obvious. It's an obvious example, right? I think this trend has been the benefit of moving to America is moving mining machines to America is becoming more and more beneficial. In order for North America to become a key player in the Bitcoin ecosystem, you need to control, to some extent, control part of the production. I think the building up a financial system up from the ground required to be very as close to the supply side as possible. I think it's just going to be very difficult to organize rest of the activities if every coin that you interact with is purchased from China. I think, but just, you know, to your real question, countries that would benefit from moving hash rate to that place, obviously places with stranded electricity, with stranded energy, that they benefit from having Bitcoin as a natural buyer of this otherwise local wasted energy. I think that the characteristic of Bitcoin is becoming more and more clear to people. The question is just which group is going to be the main, what type of group, whether it's businesses or the government function, is going to be the main people that's pushing this to happen. I think it sounds very obvious. Oh, this, you know, moving Bitcoin mining to location X is good for location X. But I think there's just all of us here know that there's so much nuanced decisions that are in the play.
I think you made a lot of great points there. I think the point on Bitcoin miners moving to areas that have otherwise stranded resources is great, and I think that there's a wonderful metric to determine what's the relative scarcity of different resources, and that's the price. So if areas have a very low electricity price, that means that they have excess electricity. Bitcoin miners are going to be incentivized to come in. I think the only exception to this is areas that subsidize their electricity. So if there are large government subsidies on electricity, it's basically the government, directly putting money into the pockets of Bitcoin miners, and people get upset with that. So I think that's why you saw, areas, especially areas where electricity is run by the government and not produced by private companies, you're going to see a lot of pushback in terms of Bitcoin mining. I think it's one of the unfortunate reasons why we don't see as much Bitcoin mining in places like Europe and Canada as we would hopefully see, based on their resources today. But and I think it's also why you see, even this happens in China where there are subsidies in electricity and then they get stripped away for Bitcoin miners. And it's perfectly logical to see the reason why governments don't want to subsidize specifically an energy arbitrage.
So Jesse, are you saying that wind and solar energy projects, like they're going to stop subsidizing them because they start mining Bitcoin?
I think wind and solar subsidies are already running out in the US. I think that we've got a year or two left on the subsidy programs there. I think if you look at wind and solar in the United States, subsidies were a big part of getting that industry going, but there's a huge amount of growth projected even beyond the end of subsidies there. And that's because wind and solar now are at the point where they're just so much more competitive than alternative fuels. And the big drawback for them is obviously the intermittency, but that's not a problem for Bitcoin miners.
Yeah, I just want to follow up to Jesse's point. I think this is something we're seeing in China very, very recently as well. So there, the alternatives to Sichuan, Yunnan, these places where they benefit from the flood season are Inner Mongolia and Xinjiang. These places, they have a lot of coal, right? And this is a popular place for mining activities in China between November to April. Basically, the miners, they migrate to these regions after the flood season is done. And recently, and Elsa probably can talk about this better, there's a wide sweep action to remove subsidy to data centers that are providing energy specifically to what they call blockchain servers. So this is happening, and I think it does have a pretty substantial impact to the cost of production in those regions. So the question becomes, after this flood season ends in end of October, November, where these miners are going to go? Are they just going to suck up and take the cost, or are they going to move out of China? I think we're going to see some inquiries out of China very soon.